The Toronto real estate market showed its resiliency once again with month-over-month pricing going up $82,000. Now I'm going to talk about why that is an anomaly, and we're not really going to be seeing more of that moving forward. And I'm going to be breaking down the February numbers that came out from the Toronto Regional Real Estate Board, what it means, and where we're headed into 2024. So make sure you watch till the very end. Hello everyone, my name is Sitzer from Teamster Real Estate. I help clients with buying, selling, leasing, investing, as well as platinum access to pre-construction condos. If this is your first time, please go ahead and hit that subscribe button for all things real estate. So let's get right into the numbers here. I'm going to talk about the numbers that came out from TRREB. Now, again, as I preface in all my videos, take it with a grain of salt because TRREB encompasses more than just Toronto. It also includes Halton region, Peel region, Durham region. So it's, think of it as the GTA market update in a nutshell. High-level overview. So let's take a look at the numbers regardless because it does give us a very good picture of where we're at in the market right now. We saw a lot of sales activity in the month of February compared to January, which was a very slow month. Average sales coming in at 5,607. New listings up 11,396. Active listings at 11,102. And I'm going to be talking about active and new listings and what that means right now. The average price coming in at 1,108,000. Okay, first let's just talk about the year-over-year numbers, right? Year-over-year, pretty flat, right? Maybe 0.4% increase, whatever that price is. Last February was what we'd call a very slow market because we were at the peak of our interest rate hikes at that time. The bank hadn't made a rate hold announcement yet. All we'd seen were rate hikes. If you look at this chart, it shows you the trajectory of what the Bank of Canada started doing from the beginning of 2022. And around February is when people were, two things. Number one, it was the winter months. Number two, interest rates were still high and there was no sign of it slowing down. So activity was naturally quite slow. It wasn't until March 2023 to May 2023 where we really started seeing an uptick in a lot of sales activity and also prices because the bank had made their rate hold announcement in March, and that's when we started seeing this crazy activity in prices, multiple offers on properties. So going back to the sales numbers, year over year, sales are up almost 18%. New listings are up 33.5%. And that tells us that sellers are feeling more confident to list their properties. Remember, sellers are also buyers. If a property owner sells their house or whatever property they own, they still have to go somewhere. They still have to buy something to move into. So sellers right now are not only feeling optimistic about their sale price, but they're also feeling optimistic about going into the market to purchase. And I'll get to more of why people are feeling more confident to buy in just a minute here. When you have a lot of new listings come into the market in a case like this, where we saw not just a month-over-month increase in new listings, but also a year-over-year 33.5% year-over-year increase in new listings, that tells us that there's a lot of choices for buyers as well. If there's no new listings coming out, there's not really much sales happening. So this is a positive sign for the Toronto and GTA real estate market that activity is picking up right now. People are feeling that optimism, that confidence in the market again. Now let's break down the property types, prices. The average price for detached, both 416 and 905 coming in at $1,443,000, semi-detached at $1,123,000, townhouse at $934,000, and condos at $695,000. What's interesting is that month over month, these prices have spiked up quite a bit for the average property type. Detached from the month of January to now gone up $92,000. Right, that's the lion's share of the increase that we're seeing. Although semi-detached went up 8.24% month over month with an increase of $85,000. Townhouses ticked up 4.79% with over $42,000 month over month increase, and condos coming in at almost 2% increase month over month to $13,366, which also month over month overall prices have gone up 8%. Now, is this going to be a trend where we see, from February to March, month over month increases in detached by, 92,000 and then semis 82,000 and townhouses, 42,000? I don't believe that's going to be the case. This is more of an anomaly because January was overall a very slow month, although we did see quite a spike in activity in the last couple of weeks towards the end of January. People are starting to get more and more used to this higher for longer interest rate environment. First-time buyers are entering the market right now from the sidelines because they're paying rents that are incredibly high. And they're okay with paying slightly higher when it comes to their mortgage payments so that they can start to build equity and future into their home ownership. if you're paying close attention to the mortgage rates, fixed rates are down on a 3-year term, 5-year term. I'm talking to mortgage brokers where he's getting my clients under 5% for a 5-year fixed, which is pretty insane, especially with the interest rate environment that we're in right now. Not to mention the news of the rate holds. We're sitting at March 6th today, Wednesday. The Bank of Canada is about to make an announcement, which is expected to be a rate hold. But even announcements like those really trigger confidence and optimism in the market because people know that rates are going to fall down at some point. And most experts believe that rates are going to start falling as early as the spring, which I don't believe the rates will drop that soon because I think the Bank of Canada is also monitoring the real estate market closely. And they don't want a crazy spring market to take off and prices to start escalating again. So I believe that the Bank of Canada will start to cut rates likely in summer, maybe even early fall. However, when that does happen, when the bank starts cutting rates, we're going to see a flurry of buyers come back into the market and we're going to start seeing that crazy frenzy again. I believe for the rest of the year, we're going to see a slow and gradual month-over-month increase in both sales and also the average price. People are starting to be more and more realistic about home ownership right now, and they understand that mortgage payments are going to be high, but they have to enter the market or upsize or downsize. Whatever situation they're in right now, they've accepted these higher rates. And again, as soon as interest rates drop, it's going to trigger a lot of buyers to come out into the market. But if you're somebody that's on the sidelines right now about buying a property, and especially if you're looking to downsize, this is the perfect time to downsize. There's quite an oversupply of condos in the market, but there's still not a lot of options when it comes to low-rise townhouses, semi-detached, detached. So if you are somebody that owns a low-rise property and you're potentially looking to downsize, this is a great time to do that. But if you'd like a free, no-obligation, one-on-one consultation, whether to see if this is the right time to buy or sell for you, feel free to book a call in the description below, and I'll be happy to chat with you one-on-one. Thank you guys so much for watching. If you found any value in this video, please go ahead and give it a thumbs up. And of course, don't forget to subscribe. Until next time, take care.